Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. Doing kind of a double take here. I'm going to be, this is recording and live right now on my Twitter Spaces, and I'm also recording it on YouTube. The Twitter Spaces will be audio only. And if you want to see the charts and everything and the websites that I'm putting out, you'll have to find that on my YouTube channel or on my Substack as well. I'm doing a lot of content on Substack these days, so it's you'll have to find that on both the locations. I just want to tweet this out before I really get started. Share via, and I'm having a little bit of problems here with my sharing. I'll have it figured out in a minute, I hope. Unfortunately, you'll have to find it on my Twitter. I believe it sends a message out to my Twitter people. Let me just see here. Sorry about this slight delay. Not to worry. I'm going to get started. So the other day I had an interview with Rob McEwen, who's one of the most successful investors and company builders in the mining space. And as I was doing the interview, it really stood out to me of why I do these shows. We were talking about the lost generation in the mining space and how that has a long-term effect on exploration and new mine development. I'm 58 years old. I started in the business 30 years ago. And when I came into the business in the early 1990s, the 1980s had been a pretty tough period for the mining sector, and not a lot of people were getting into the business in the 1980s. And even after I got into the business, it really took until about late 1990s or 2001 before there was a revival. So you had a couple decades there that are called the lost generation in the mining space. And why this is important is a couple of reasons that I can think of off the top of my head. Is one is that people in my age group that got into the business during the lost generation were very fortunate that we had mentors from the generation before us that didn't have a lot of people to hand down their knowledge from all their experience to. And fortunately, I was sort of a sponge for that kind of information, and had a great group of guys that were mentors to me that helped me and understand the important things in geology, geophysics, geochemistry. And unfortunately, I kind of have a good memory. So I remember a lot of that stuff. And I like to be able to, when I'm fortunate to have been the recipient of mentorship, I like to pass the knowledge down, which is a major reason why I do my shows. On the mining side of the business, how it affects things even to this day is that the people that were in the generation before me, a lot of them have left the business. Unfortunately, some have passed away, many of them have retired, and many of them are well into their retirement ages. And so they didn't have a big audience of professionals to pass that knowledge down to. And that affects the exploration business, the development business, and that has a long-term effect on the success in the mining sector, which is a main reason why I'm so bullish on so many metals is because I've seen these long periods of underinvestment in mineral exploration for precious and base metals. And that has significantly affected the supply chain of those metals. And meanwhile, we have some very strong demand coming. In gold, we're seeing very strong demand coming from the central bankers of the world that are buying up copper in a big way. There's also a push towards a alternative currency for trading in the world market that is dominated by the US dollar. And a lot of these countries want alternatives to the US dollar to do their trade in. You've probably heard about the BRIC nations, Brazil, Russia, India, China, and others that really are pushing towards having an alternative to the US dollar. And those same countries are also buying up gold left, right, and center. And so, these are some fundamental reasons why there is a chronic supply problem that can't be solved anytime soon, and also strong demand. Copper is another example of that. You've got decades of underinvestment to find, explore for, and find new deposits, and then turn those into development projects. And so the supply chain is very, very weak right now, and will continue to stay that way for many years, if decades is quite possible. And yet you've got all this demand coming from the electric vehicle revolution, alternative energy sources. The developing countries need to use a lot of copper to wire up their electrical power grid. Even the developed countries, the United States has an ancient power grid that needs to be upgraded and rewired, because to get the energy to, whether you're looking at nuclear or solar or wind or whatever energy source you're looking at to power those electric vehicles, you have to get it to those electric vehicles, which requires a lot of copper, and it requires a lot of other metals in order to build those energy sources. And so wherever you look, there's you look at the supply side, you look at the demand side, and there's a very compelling argument to be made to be bullish on copper. Even people outside the mining, or people inside the mining business, like Robert Friedland, says that we're in the revenge of the miners era. And what I think he means by that, I'm not going to pick his brain or try to put words in his mouth, but I think he sees the same kind of supply and demand argument that is very bullish for the price of copper. And even people outside the mining business, like Stanley Druckenmiller, has recently talked about how bullish he is on copper. Now, he may think his argument is a little more after the potential economic slowdown that he sees coming, but he also sees the long-term demand and the supply scenario being extremely bullish. So, these are some structural issues that you just can't get away from, and why I believe that investors out there should be, putting their money into metals, because I just think that it's, they say Wayne Gretzky had a famous saying that you go where the puck is going, not where it is. And a lot of investors invest in where things are, and not so much on where the puck is going. For the American viewers out there, you like the saying about swinging at fat pitches. Well, the metal space is a very, very fat pitch right now. And even more of a fat pitch, or going to the where the puck is going, is in the mining stocks, because although we've got gold and other metals starting to improve quite dramatically, the stocks, whether you're looking at the big ones or all the way down to the littlest ones, are trading at record low valuations relative to what they have in the ground. And the last time I saw this was in 2001, and that was the start of the 2001 to 2011 bull market in precious and base metals, which was a tremendous opportunity for investors. And even the early days of that bull market, the stocks nobody was believing that we were in what would end up being a decade-long bull market. And so there was a lot of doubt, and it climbed the proverbial wall of worry. But those that were able to identify the opportunities early were the ones that made a lot of money in that bull market. And I think we're in the same situation today. We've got the start of a bull market. I'm going to switch my screen here and bring up the price of gold, just to show you some key points that I wanted to make about the price of gold. Let me do a screen share here, and there it is. Okay, so as you can see here, gold bottomed in September, October, November. It had a triple bottom, and the bottom was at about 1625. We're about $400 higher than that right now. Importantly here, we had a big breakout in early November, huge run till the end of January. Some economic numbers came out that gave wind in the sales of the US dollar. So gold moves the opposite direction of the US dollar, and it got under pressure, had a double bottom there and another big breakout. Now, something else, some of these key trends in the moving averages. We had a golden cross here in January, and a very powerful January effect, which suggests that we should have a very bullish year in 2023 for the price of gold. And as you can see here, the 200-day moving average bottomed at about 1778, and is currently now swinging upwards, and it's currently at 1827. So that's about a $50 difference between the bottom of the 200-day moving average and where it is today. The bottom of the 50-day moving average was back in early November. That was at 1680, and we're now trading at 2020, let's say, on the nearest futures contract. And now we have the 200-day moving average in a bull trend. We have the 50-day moving average in a bull trend, and we have the price of gold well above the 50-day and the 200-day moving average. So from a technical, whether you're looking at this from a fundamental sense, where there is not enough supply, we've got gold nearing record highs, and yet production is going down. Economics 101 tells you that that's not supposed to happen. When the price of a commodity is going up, producers are supposed to be able to produce more of it, which pushes the price down. We're seeing the opposite happening. As the price is going up, production is going down. And yet demand is super strong. A lot of rich investors, the central bankers of the world, are buying it hand over fist. In fact, the central bankers of the world have been buying gold aggressively since the economic crisis of 2008. But 2022 was like a 50-year high, and 2023 looks to be being more buying than in 2022. And this goes back to what I talked earlier about, is that I don't think it's as well understood as it should be in the investing world, that we're going through a currency war right now. And that currency war is being fought by countries that want an alternative to the US dollar as the world reserve currency that's used for international trade. And those same countries are also the ones that their central bankers are aggressively buying gold. And so that's one reason to be bullish on gold. Another reason to be bullish on gold is that the Federal Reserve has been fighting aggressively against inflation. They haven't been doing a very good job of it, and they are losing the battle. And so if you want to protect your money against inflation, the gold is a good place to park your money. I believe that the Federal Reserve is going to stop raising interest rates probably at their next meeting, because they're significantly breaking things. They broke things in the real estate market. They've broken things in the car sales, in big ticket items. They're putting the consumer under extreme pressure, where the consumer is using their credit cards to make ends meet, and they're paying 19-20% interest rates. That is a dramatic problem, caused by these things are all caused by the Federal Reserve. You know, after 14 years of near zero interest rates after the 2008 economic crisis, they decided to jack them up dramatically to 5 to 5.25 in their most recent meeting. And that's when you're going from zero to the Fed fund rate of 5.25, 5 to 5.25, that's going to, break things, and it's breaking the banking. We're in a banking crisis that some feel that the Federal Reserve, the FDIC, the Treasury, the government is able to solve this problem. Well, it's hard to solve a problem when you can't recognize that you caused the problem. And those various groups did their darn best to create the problem, and they're not accepting that they caused the problem. So it's hard for me to understand how they think they can fix the problem if they haven't realized that they caused the problem. And so ultimately, I think that this is going to cause the Federal Reserve to stop raising interest rates, primarily because of what they've done to the banking situation. This crisis is far from over. There is ripple effects that are contagious, and you're going to see more banking problems. The ones like Silicon Valley Bank, Signature Bank, Credit Suisse, First Republic, and now there's others, Pac West, that are having problems. They're not the only ones sitting on these portfolio of assets that include long-term bonds and also mortgage-backed securities. And even the Federal Reserve is, well, they're the biggest holder of those kind of toxic assets. They're toxic because of what the Federal Reserve has done with interest rates. Their big moves over this last year have pushed a lot of those kind of assets underwater. And the bankers are not the only ones, including the central bank, that are holding those assets, but there's other institutions. So I think this banking crisis is a bigger problem than many think it is. And this is another reason why I think investors want to own gold instead of the US dollar. And as you can see here, I'm now pulling up the US dollar. If my share screen will cooperate. There's the US dollar. It topped out in September at 1411, I believe, 114, and this is the US dollar index, by the way. So it topped out at 114.782. It's currently trading at 102.724. The 50-day moving average topped out at 111.249, and the 200-day moving average topped out at 106.723. Now we're seeing the 200-day rolling over. The 50-day has been on a bear market trend for several months. In the last couple of days, we had a bit of a rally, which took it up to the 50-day moving average. But I really believe there's so many things that are conspiring against the US dollar that it's just looking for an excuse to drop. And when it does, that's very bullish for the gold, the silver, copper, other assets that are priced in the US dollar. I'm just going to quickly bring up copper here. Copper's been kind of going sideways for most of this year with a recent pullback to below the 200-day moving average. Now it looks like the 50-day could be getting close to the 200-day. I think it will start to rally off of this and not go into a death cross. It looks very oversold to me here. Again, as I was talking about earlier, there's a weakness, significant weakness in the supply chain and dramatic demand coming. And I think that this is ultimately very bullish for the price of copper as well. So now I'm switching over to my Substack, which you can find at rocksandstocks.substack.com. Started using this site a lot more about 9 months ago because they make my life a lot easier than trying to present my my reports on a website. So this is where you go to my Rocks and Stocks website, and it'll point you to, it'll send you to this Substack. And what I wanted to talk about here is this just sort of gives you an idea of the things that I've been working on. Just earlier today, I put out a new report on a new sponsor of my reports, a company called Copper Road Resources. Headline is Copper Road Resources is on a path to success, focused on copper exploration. And what I talked about at the start are the significant reasons why I'm bullish on copper. You can read that in this article that I put out earlier today. Then I started talking about the reasons that I am bullish on Copper Road Resources and inviting them to be a sponsor. This map here that you'll see is a good representation of one of their key targets, which is called the Richards Breccia. And I'm going to zoom in here. What you can see here are this whole AR98-07 hit 27 meters of 1.46% copper, 0.17 grams of gold, and 3.8 grams of silver. This one here coming at this angle, AR97-25, had a 40-meter intersection of 0.86% copper. So you're getting some nice thick intersections, and this is part of a breccia pipe. It's like a cylinder, and inside that cylinder, you can see that they're getting excellent continuity of their attractive grades of copper, and it's wide open at depth. It's wide open over here and over here, and that's one of the key targets that they'll be drilling. Now, I also mentioned in this article that I will be meeting, having an interview with their geologist this week. So stay tuned for that. A few days ago, back on Friday, I recorded an interview with Rob McEwen. And why I like this interview is Rob and I really got into some of the his philosophy and outlook on why it's a good time for investors to be looking at putting their money into mining stocks, specifically gold and copper stocks. And his McEwen Mining is a mining company for gold. And they've also got a remarkably good copper project in their McEwen Copper, which is 52%. It's a private company that's 52% owned by McEwen Mining. But for my exploration junkies like myself, he's also started with, I call them the dynamic duo. Rob McEwen and Ian Ball are working together on Canadian Gold Corp, which is their new venture. And Ian started working for Rob right out of university and with Gold Corp. And at one time, Gold Corp was one of the lowest cost producers of gold in the mining business and one of the best performing mining stocks during the tenure of Rob and Ian working together. And now they're working hard on this. They're started working aggressively on Canadian Gold Corp. I wanted to pull this up here. Canadian Gold Corp. They vended in a bunch of projects that was in their private company into a company called Satori, and Satori has recently changed its name to Canadian Gold Corp. And part of that deal was Satori had what's called the Tartan Mine. And here is an image that I think really is important for people that are watching Canadian Gold Corp, is to take a look at this image here. And these grays are the underground workings of the past producing mine. As you can see, there's lots of high grade still in this system. But what gets me really excited is you go down here in this 2017 resource limit. So all of the 2017 resource comes from material above this line. But then you go deeper and look at some of these numbers, 23.8 grams per ton of gold over 12.6 meters, 9.7 grams of gold over 4 meters. This is exceptional stuff. And this depth potential is wide open. They note here that this is a 2023 phase 1 drill target area. So I'm really optimistic about seeing them drill down here and deeper. This is in the same kind of rocks as you find orogenic gold systems like the Red Lake Mine. And this is the kind of mineralization you look for in an excellent orogenic gold system. You've got great continuity of the high grade, and it's wide open at depth, and you're only down 750 meters. In these orogenic gold systems, they are known to go down several thousand meters. In fact, at the Red Lake Mine, they went down 1,000 meters before they got into the bonanza grades like you're seeing here, and it continued for another 1,000 meters. So that's the nature of these kind of gold systems, and I'm really quite excited about what they're working on there. Okay. Notes to paid subscribers. I'm very fortunate to have a group of paid subscribers on my Substack. And I'm really glad to have them as they and I provide them notes when I see things that I think could move the market. Candente Copper, I did an interview with Giulio Bonifacio, who's their chairman. And what makes Candente Copper quite a compelling story is they have one of the top 10 undeveloped copper projects in size and grade. And this has the potential for a long-lived mine. It had a historical preliminary economic assessment done on it back when the copper price was quite a bit lower than it is now. And even back then, using those lower numbers, it looked like it would be a robust mine. These are the kind of things that major mining companies need. And I think that this will be a future mine, and it will be owned by a much bigger company. And Candente Copper is one of my sponsors in my reports. Yeah, check out that interview. It'll help you do your homework on Candente Copper. Arizona Silver is also a sponsor of my reports. And on May 9th, just 5 days ago, I did this interview with their top geologist. And what really stood out of the page on the news that they had out when we did this news release was that they hit some very high grade, 51 grams of gold. But what really excites me is that it's in an epithermal vein system, and they're above the boiling zone. The boiling zone, or the bonanza zone, is what makes mines in epithermal veins. And they're still above that zone, and they're already hitting exceptionally high grade. So now they've drilled one hole that's much deeper and targeting that boiling zone. That hole's in the lab. They've got another one underway that they talked about expecting to have finished by later this month. So they got a lot of pending results, and I think collectively, if you look at the quality of the project, and I think they've got a pretty special epithermal vein system. And just to give you an example of why these epithermal veins are so, mines are so important, is you look at SilverCrest here. They just had a news release out 3 days ago, and it was the first full quarter. Well, I'll use the quote here by Eric Fear, who is the CEO, and he commented, and I quote, "Marking another significant milestone for SilverCrest, Q1 2023 was our first full quarter of production since Las Chispas was declared commercial in November of 2022. We generated 19.3 million of net free cash flow, allowing for accelerated debt prepayment of 25 million and a robust quarter-end cash position of 45.8 million. As a testament to our strong financial position, execution, and risk management, subsequent to Q1 2023, we made an additional debt prepayment of 20 million and have now repaid 95% of our debt within 6 months of declaring commercial production. We remain focused on completion of the updated technical report in late Q2 2023, which will include updated costs and new life of mine plan, and allow for the inclusion of data from our initial production period. This report will provide us with details to support production and cost guidance." But then you look at some of here's the one that really stands out to me. Cash costs of $6.57 an ounce of silver equivalent sold, and all-in sustaining cost of $11.45 an ounce for their silver equivalent sold. So they're producing silver at an all-in cost, everything at $11.45. Silver's trading at $25. That's why this is such a cash-making machine, and that's the nature of an exceptional silver epithermal vein system that has silver and gold in it. Now, I started by talking about SilverCrest from mentioning Arizona Silver. What makes Arizona Silver so exciting is that their epithermal vein looks to be dominantly gold. And you get a high-grade gold epithermal vein and low cost and high margins. And look what that epithermal vein has done for SilverCrest. They're 95% paid back all their costs to bring it into production in the first 6 months of production, because it's such a cash making machine. And that's the nature of an exceptional epithermal vein system. And I think Arizona Silver is into one of those. And to understand more about the recent results that they reported, have a look at that interview that I did with Greg Hahn. Focus Mining is a very interesting story. That company recently just became a sponsor, and I did an interview with their CEO, John Rainfield, and I think that when I was doing my homework on Focus Mining and invited them to be a sponsor of my reports, what really stood out to me was the similarities that I was seeing from the early days of Osisko's discovery of the Malartic mine. I was very fortunate to pick that in my reports very early in their success and follow it right through to them being taken over at several multiples of the prices that I had featured them in my reports at. And so I know the Malartic story very well, and Focus Mining is also focused in Quebec. And there's a lot of similarities that I see in the early days of Osisko's Malartic success in what Focus Mining has at their project. And that's another one you can check out the interview to learn more about them. Just before the interview, I also wrote an article about them. And as you can see here, this is a 2-kilometer trend. And, you know, I'm not a mining engineer, but I can envision what a pit would look like. And if you can see my cursor, almost all of this would make it into the pit. What's exciting is that this needs a lot more drilling to add to the resource. They've got this potential over here at the Hendrick zone. The top of the Hendrick zone looks like it could make it into an underground or an open pit. Got some very thick intersections of the kind of grade that can be mined in an open pit. The zones all seem to be pointing in the same direction, so the depth potential is wide open. They got another zone over here called Morris that they've hit some visible gold, and it's more of a high grade target, but it looks exceptional as well. So yeah, they've got a great start to what I think is going to lead to a lot of success. They're looking at a resource at the Galloway project of 1.419 million ounces of gold with an average grade of 1.07 grams per ton of gold and 41.2 million tons. So it's a wide open system that needs more drilling and more expansion, laterally as well as at depth. And who knows, down deeper here, you could find this tells you that there's a big gold mineralizing system. Where that all came from is still wide open. And those are some of the reasons that I'm so bullish on Focus Mining. The headline of this one, I talked about banking crisis continues while gold is in a bullish trend. Talked about Osisko Mining, i-80 Gold, Dynasty Gold, Summa Silver, BlackRock Silver, Goliath Resources, Sokoman Minerals, and Wolfden in this report. You can check out all those companies there. Kuya Silver, I've recently started covering this company. Did an interview with their CEO. And I think they've got a really interesting story that I'm going to keep following closely. This was May 1st, so a couple of weeks ago, I did this interview with Ian Ball and Rob McEwen. Again, I call them the dynamic duo because of the success that they had at their at Gold Corp, and now they've renamed Satori Resources as Canadian Gold Corp. And as I showed you earlier in their map, they I think that this is a very not a well understood story yet. Still a very modest valuation. I'm going to invite Ian Ball and Rob McEwen on for a show next week, because I want to go over that map and some of their plans, as well as their other assets, which are quite compelling as well. And if you look at the group of assets that they have, I think the company is very undervalued, and with plenty of catalysts to unlock that shareholder value. This i-80 Gold is, as I said, is quickly moving toward building a multi-billion-dollar Nevada-focused mining company. I did this interview with you and Downey. Actually, there should be another interview up here somewhere. I did one recently with you, and just maybe I didn't share it on my oopsie. I need to share it on my Substack as well as on my YouTube. Sorry about that. Yeah, they've got a great story. They're taking over their next door neighbor. They're having great results from their drilling at their Bonanza CRD. Yeah, I think they've got a great future and going to grow into a much bigger company. Gold is getting stronger, which will bring generalist investors into metals and mining stocks. These are my shows that I talk about the sector. So I open them talking about the trends that I'm seeing, and then I talk about specific companies in those. So you can find that those details there. Oh, Goliath Resources. I'm working on getting these guys on to another interview, and or get an interview with them. And I wrote this article when they just became a new sponsor. Some of the highlights, you can see these pink dots here, and these yellow ones here. So the yellow ones represent where the sherbet zone comes to surface in daylights. And these pinks and purples here are key structures. And these are the structures that are how the gold fluids make their way up into the sherbet and the associated zones that they have. What really excites me a lot is where these all come together. Okay, so keep this in your memory, and I'm going to go down to, now here you look, and here again is the zones. The sherbet is the big yellow one, and then there's other zones that sit right on top of it. That purple fault is here, and the pink ones are here. And so as you can see at the bottom here, still wide open for exploration. And here's the sherbet zone from a profile, and the stack zones that are right on top of it. So as you go down the mountain and follow these structures, it's still wide open here, and it looks like they could be getting closer to the source or the heat engine that created this mineralization. Already in here, it's easy to make the argument that they're looking at something in the 2 to 5 million ounce gold range, ounces a range. They're having great success with their drilling, 95% success rate. And in these various zones, they've got the average thickness is a little over 6 meters, and the average grade is over 6 grams per ton of gold. So this is quite an exceptional story. And I'm really looking forward to talking to them soon about the new drilling that should start up very, very soon as well. I think these guys are onto a multi-million ounce gold discovery that could get well over 5 million ounces. I mean, this is the extension of the system. They haven't even got into the guts of the system yet. And yet they've got these faults all coming together down here at the bottom of the mountain. And I'll go back to this, and this represents the bottom of the zones. So still wide open and pretty exceptional stuff for Goliath. And I'm looking forward to my next interview with the guys at Goliath. BlackRock Silver, I think, is very oversold and is quite an exceptional project. Earlier I was talking about the numbers from SilverCrest. They're producing from an epithermal vein system at $11.45 an ounce of silver, and they're selling it for over $25 an ounce. That's a great way to make a lot of money. And that's the nature of these epithermal vein systems when you hit the boiling zone. And BlackRock Silver has done exactly that in Tonopah, where they have a resource with actually grades that are very similar to the maiden resource that SilverCrest found early in their exploration success. And BlackRock Silver has a project that I think can get a lot bigger than the 50 million ounces they've already reported. I think it's going to be quite significantly larger than that. And that's not their only project that they have that really excites me. They also have an epithermal vein system on their Silver Cloud project. And there they hit bonanza grades in their recent drilling in late 2022 that I don't think the market really understands, because what's important about that is they hit 70 grams of gold and over 600 grams of silver. What that tells you is they have definitely hit the boiling zone of the vein that they drilled. Now, the thing about epithermal vein systems is they often come in clusters. So where you find one, you'll often find more. So at Silver Cloud, they need to keep drilling to expand the boiling zone of the vein that they've already hit, and also explore for new ones. And I think that puts them in a pretty exciting scenario as well. So have a look at BlackRock Silver, the interview that I did with Andrew Pollard. Galantis Gold I did an interview with their CEO, Mario Stefano. Like that story a lot. They've got a combination of an orogenic gold system in Northern Ireland and a VMS system in Scotland. The Northern Ireland orogenic gold system is much more advanced than the VMS system, but they're going to be drilling both of those and creating a lot of catalysts. The orogenic gold system, what excites me about that is that they're still very high in the system. So when you're high in the system, you're going to only find fine grain gold. And as you follow those systems deeper, you get into more coarse grain gold. But even in the fine grain gold, they're hitting very high grades. So that tells you a lot about the orogenic gold system that they have. And most of their drilling is only on two zones. And those zones, as well as other zones, are in close proximity to each other. And I think what is happening is that as they follow those zones deeper into the orogenic gold system and get closer to the heat engine, that they're going to hit coarser grain gold with bonanza grades of gold in it, and that these various different zones can all come together at depth. And then they've got this new VMS story that looks quite exceptional as well. And Mario and I had a good chat about both of those systems. And I advise you to take a look at that interview. I did a 3-part series of perfect storm brewing for stocks and companies with gold, silver, copper, lithium, and other metals. Talked about a bunch of companies. You can find the companies and the videos here on the Substack. I'm not gonna, I talked about probably 30 companies, so you can go find that. Here was an interview earlier. I was talking about Arizona Silver and Yale Simpson, who many of my long-term audience will remember because I had two of his companies as sponsors of my reports in the past, and both of those companies ended up being taken over at significant premiums to where I had covered them in. One was called Extore and one was called Exeter. And Yale's a very smart guy in the mining business. And he gave us some insights into his philosophies about, how to do that, what to look for in the mining business, and why he's involved with Arizona Silver. And as you can see, I'm constantly putting out content here, and I'm not going to keep going through all of these shows that I've done, but I will say that I at Substack I present my video shows. I also present my written reports, and that's exclusive to the Substack. I don't do my written reports anywhere else other than Twitter now. I'm starting to post them on Twitter, the actual full report, because I got one of those blue check marks and it allows me to do longer form reports. And for the video only stuff, you can go to YouTube and you look up Rocks and Stocks news, and you'll find my YouTube channel. And I always, when I go to my YouTube channel, I always go play all. Oops, not play all. Sorry, I go to videos. And in the videos, you can see all of my recent reports. This one I did with Rob McEwen a few days ago, Candente Copper, I-80 Gold, Arizona Silver, Focus, sector reports, Kuya Silver, Canadian Gold Corp, I-80 Gold, another sector report, BlackRock Silver, Galantis, Arizona Silver. I-80 Gold is on a lot because they just have a litany of great news. Timberline Resources is in the same area in Eureka, Nevada as I-80 Gold, and I like their potential to make a discovery. Massivo Silver is in Nevada. This guy here his name is Brian Brewer. Brian was part of the team that made the Mine Finders discovery and was with the team until they were taken over at a huge premium and a big money maker for investors. Why I like talking to Brian so much is that he's a real level-headed, down-to-earth geologist, doesn't want to confuse you, makes things simple so that non-geologists can understand it, has a real sharp mind for exploration. And if you're in the exploration, if you're investing in exploration, it's understanding the kind of things that Brian Brewer shared with us that will make you a better investor. So not only does he talk about why he's involved with Massivo Silver, but also gives you insight into the mind of what a good explorationist looks for. Origin Royalties. Patty Nickel and I worked together for many years for a geological consulting firm. I know him very well. He's running an excellent royalty company. If you're into royalty companies, that's a good one for you to take a look at. So this goes on and on and on and on and on where I do interviews. So as I started this show, I was talking about why I do my shows, and my shows are to highlight the companies that I follow closely, my picks, my sponsors, and really the goal is to help my audience get into the minds of the company executives that run these companies And by understanding what management of mining companies are doing and why they're doing it, will, I believe, make you a better investor in the sector. And I'm also a big proponent. I'm always talking about the importance of doing your homework. And what I really provide is a gateway for you to do that homework. It really helps you doing your homework about a company when you hear the story from the guys running the company. And then I also advise you to go check out their websites, check out their news releases, check out their corporate presentations. And I think collectively with those interviews and the homework you can do on their websites, will make you a really informed investor when it comes to the companies that I follow. And I think you should be in any company that you follow. Be well informed, because that way you're not going to make investment decisions based on emotions because of what a stock does on a day-to-day basis. And if I see one of the biggest problems that I see for investors in this space is they tend to be stock junkies, stock movement junkies. They're watching every tick of the stock. And they don't know the story as well. They don't know what the company's doing, but boy, they can tell you everything about the day-to-day fluctuations of that stock. And that's why a lot of investors, they buy high when the emotions and the excitement is high, and sell low when it goes the other way. And if you want to be a successful investor, you got to buy low and sell high, do the opposite. And the way you do that, I believe, is to be well informed and do your homework on the companies. On that note, have a great day, and we'll talk to you soon.